Hello everyone. This is the pre-market report video for today, 6th September 2023 in the Indian stock market in terms of Nifty and Bank Nifty. First, quickly let's see what happened yesterday. If required, please pause and have a look. If you see in plain sight, it looks very volatile, but actually the difference between the day's low and day's high was approximately just 50 points. 50 points in 19,500 is equivalent to 0.25%. So that's the whole day's fluctuation, just 0.25%. And that's too, it traded only in the positive region. So for the third consecutive session, Nifty managed to close positive, mainly supported by IT stocks and pharma, marginally by Reliance. Here, about IT sector short-term positivity, we discussed enough in the last pre-market videos, like Indian IT is expanding in Europe and new opportunities in AI, etc. under all. In addition to that, S&P Global released the India Service PMI report. The data for August month came as 60.1, which was lower than July 62.3, but still reading of 60 in the PMI data itself was very phenomenal one. Here in August PMI data, surge mainly comes from record increase in new IT export business, and also there was a significant increase in the IT order book, which made all the major IT exporting stock very positive. However, the high weightage financials and banks drags the market down, which in turn capped the increase in Nifty. 9 out of 10 times if high weightage financials and banks closed negative, then for sure FII will be a net seller, and yesterday was a no exception. The net sold for approximately 1,725 crore rupees, while DAI net bought for near 1,080 crore rupees. But there is one really a surprising thing. You might also noted this. In the last 2 days, FII net sold for over 5,000 crore rupees and DAI net bought for only near 3,500 crore rupees. Still, somehow Nifty increased 140 points. Not just Nifty, even both mid cap and small cap as well. In last 2 days, both mid cap and small cap hits the fresh all-time high value. So I think it seems along with DII, retail people looks bullish. Anyway, 10 out of 13 major sectoral index increased. In addition to pharma, realty added over 1% as there was a huge jump in recent property registrations across all tier 1 cities in India. So that's what happened yesterday in Indian market. Now moving to US, before their market opening, US investment firm / institute released the statement that they preferred government short-term 2-year and 5-year bond over the quality private credit bonds. This in turn increases all the US government bond over 2%, which indeed affected the US market negatively. Unlike Indian market, as most of the day, all the 3 major US index traded in the negative region. Here, yesterday, both Saudi and Russia jointly announced that they are going to cut their oil production cut till the end of 2023. Russia going to cut the oil export by extra 3 lakhs barrels per day. And this joint statement release increases the oil price by over 1%. At the time of this video, Brent crude oil is trading around $90 per barrel, whereas WTI crude oil traded at near $87 per barrel. This in turn increases all the energy related stocks, thus it capped US major index loss in the downside. In the end, Dow Jones decreased by 0.56%, S&P 500 down by 0.42%, whereas Nasdaq closed negative to flat. Nasdaq was mainly supported by Tesla as it increased over 5% due to some court ruling in favor of them. Then in case of VEX, it further increased to 14 from near 13. Ignore the percentage change in VEX, it's misleading. Moving on, in terms of Indian ADR, it's in line with Indian market. For example, HDFC Bank's ADR closed negative and ICICI Bank ADR closed positive. Exactly the same thing which was happened in Indian market. And same for both IT stocks as well. Then regarding GIFT Nifty, at 3 AM Indian Standard Time, it closed at 19,670, which is kind of indicating 20 to 30 points gap up opening. This is what happened on global market yesterday. Now let's move to India specific info. First, yesterday, NSE announced that from September 7th onwards, from tomorrow, they will remove the Jio Financial Service from Nifty and all other NSE related index. Second, about Vedanta, Earlier, it seems there was a conflict, but now Zambian government has agreed to return ownership of copper mines back to Vedanta Resources, so we can see those influence in the stock price. Third, based on change in open interest, just for info, there was a long build-up in Infosys, Glenmark, Coforge and IEX and short build-up in Delta Corp, SBI Life, Apollo Tyres and REC Limited. So be cautious while trading in those since both long build and short build-up will unwind anytime. Finally, IDBI Bank has filed an appeal against the NCLT order approving the merger of Z Entertainment Enterprise Limited, which will not be good for either of the stocks. As a summary, Nasdaq market closed negative to flat and FII was selling continuously. Those are the worrying things. However, Indian ADR looks okay and GIFT Nifty is indicating gap up opening of 20 to 30 points. In addition, this US energy positivity might transfer to Reliance as well, but just for info, Reliance GDR closed 0.5% negative despite it was positive in Indian market. Then about the things to look out, during our market hours between 11 to 2:30, there are lots and lots of Europe related macro such as Germany's new factory order, Europe's retail sales data, and UK's construction payment data, etc. are due. And in the night, US mortgage rate and very important US service payment data is due. Coming to technical, Nifty has maintained a positive trend as it forms doji candlestick pattern with the higher highs and higher lows for the 3 successive sessions. As we discussed a lot of times, generally doji pattern after a bullish trend could signify a possible of trend reversal, but given that Nifty has already formed a small bordered bullish candlestick pattern on Monday and this is a successive one which indicates that bullish sentiment is still intact. In addition, at present, Nifty's position is above the key moving averages. Both 50 and 20-day simple moving average affirms this bullish sentiment. Despite the overall positive trend, there has been a visible loss of momentum as indicated by the hourly momentum indicator turning negative. This is attributed to the Nifty's recent sideways consolidation. So today, if Nifty manages a strong close above the resistance level of 19,580, it might propel the index towards the 19,710 mark. However, if Nifty breaches the 19,500 support level, it may trigger an exit of long positions and will push it down towards 19,450 to 19,420 zones. Further potential loss of momentum. As a conclusion, the overall sentiment for Nifty on today appears to be bullish with strong support levels. However, considering the recent loss of momentum, recommend to monitor support and resistance level for potential breakout or breakdown scenarios. Then, in case of Bank Nifty, it forms a bearish candlestick pattern with a negative close. However, given the underlying bullish undertone and the context of the higher high and low pattern, we can view this as a temporary pullback or consolidation before a larger move upwards. In addition, unlike Nifty, momentum indicators are showing the positive crossover, hinting at the likelihood of a bullish move in the near future. Such an observation further supports the theory that Bank Nifty's consolidation following its recent sharp upward movement and is preparing for a potential upside breakout in the coming session. Here, if Bank Nifty breaks the immediate resistance at 44,650 to 44,700 mark, it could move towards 44,900 to 45,000 range, especially given the significant open interest observed at the 45,000 call option. On the downside, 44,300 to 44,200 is the strong support level. Then, as per the option data, the maximum weekly call option open interest was at 19,600. Thus, it's the immediate resistance. But there are significant put options newly written at the same place. Hence, the next maximum call option open interest is at 19,700 and that strike price is the strong resistance for the expiry. On the put side, the maximum open interest was at 19,500 strike, which is likely to act as the immediate support. Then, in case of Bank Nifty, it's same as yesterday. The maximum put option open interest is at 44,000, hence the support, whereas 45,000 got the maximum call options, thus it's the resistance to break. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video, so it will help me beat the YouTube algorithm and will also motivate me to do more. Please don't make any investment based on this, as I'm not a SEBI registered advisor. I'm doing this for my and viewers' educational purpose only. Thanks for watching.